Good morning, John Hutchinson with Traders Reserve's Breakfast Club. Welcome to February 24th. The month is flying by. Happy Tuesday to everybody. Hope you're ready for a big day. We'll take a look at what's happening. Uh, like I've said over the last several months, I cannot keep up with the news flow in the artificial intelligence sector. Yesterday, IBM loses $31 billion in market cap. Software sector is at 52-week lows. You'd think that there's no good news, and yet there's plenty of good news if you know where to look for it. I do. That's why I bring it to you. Markets are stable, rising this morning. The Trump tariffs came in a little lower than they were threatened over the weekend. Today, we're going to take a look at one stock, Silicon Motion Technology. That is stock symbol SIMO. We'll take a look at that in just a couple of minutes. But to get underway, we'll see where we are in the universe. The futures are actually a little higher than when I put this together at 8:20, 8:30. NASDAQ looks to open pretty close to 0.5% higher. Russell, S&P, Dow Jones, all a little bit higher this morning. Again, yesterday's action was down, but that was across a couple of factors. One, obviously, the weekend announcement of the new tariffs. Second, the announcement by Anthropic that they can essentially, for lack of a better term, I'll use copycat a key program from IBM called COBOL. That sank IBM dramatically yesterday, and it's another disruption factor, another way that artificial intelligence can be used to disrupt existing markets. The biggest news this morning, however, is an announcement by AMD, our red-headed stepchild in the AI2 portfolio, and a deal between AMD and Meta, valued in the double-digit billions, that has AMD up 10.5% pre-market, as it was up as much as 14.5% when the announcement hit the wires at 7 a.m. Guess I have to watch those wires every hour. But nice to see AMD with a big move, which I basically said yesterday that the stock was basing and that I could see that the stock had to go up at some point. I didn't realize it would be because of a deal announcement today, but I'm more than happy to take a 10% gain, and that'll get us pretty close to break even if that holds. But more importantly, start to build some forward momentum for AMD as they work from previous earnings to next in earnings and into the Helios launch. So some good news to start today. I'm happy about that. Yesterday, for AI2 insiders, I also released a major update to the AI2 Index dashboard, where we are now monitoring performance by segment. And this is alongside the announcement of the new segment called AI Frontier. The two things that I want to highlight for those of you here on Breakfast Club, one is both yesterday during Breakfast Club and again during AI2, the main thing I talked about was how the AI supply chain is substantially outperforming everything else related to artificial intelligence. So, as I said a moment ago, if you just read the news, you would think that AI is a bust. It's all doom and gloom. The whole world is ending, and yet average stocks are up in excess of 20%. They are significantly outperforming many of the stocks rather in the artificial intelligence sector or the AI economy. I kind of like calling it the AI economy because it's becoming self-contained in an economic sense. These are stocks that have significant growth potential now and into the future, and they make up about 80% of the positions that we currently hold in our AI2 portfolio. So we are following the money, and that is paying off. But the second thing, and the second reason I pointed out is yesterday, while I was walking through this, I made a sort of a comment as an aside that I would really be interested to see what the overall performance would be for the index. And the index performance year to date doesn't look all that exciting, right? At minus 2.8% versus the S&P and NASDAQ, which are essentially flat. But if you take out this 20%, right, this is largely almost half of the index. And this is not, I'm not doing this to defend or um, say that I'm right about stuff. It's important to look at the breakdowns here because different sectors of the tech economy are being impacted in different ways. Software right now under heavy attack, in part because of Claude and the Claude co-work announcement back at the end of January, and continuing announcements coming out of Anthropic and occasionally from OpenAI and even Gemini 3. But the reason that I asked that question was, what is the real impact of these two real sectors here, AI core and AI supply chain, since they are outperforming everything else that I'm tracking over 350 companies. So to be only down 2.8% with almost 150 companies pulling the index down so dramatically, what is the reverse impact? Which of the stocks, or what's the group of stocks that is driving the real performance higher? So I did some of that analysis last night into today, and I'll share that with you here. We talked about IBM. CrowdStrike is under attack again because of Claude code security. So cybersecurity is in trouble now because apparently Claude can do everything that they can. I don't believe it, but and I wouldn't worry about it right now either. It's not where we're focused when it comes to allocation of our capital. The IGV software ETF just made a 52-week low yesterday. The software sector has been under heavy attack. But as I said, if you pull out software from our index, look at the difference here. The core and supply chain together, 24% year to date. That is 116 companies in the index. Average EPS growth is extremely high, beating the S&P 500 by more than 20%. The other stocks in the index are down 14%. Right, so this is a tale of essentially a split in the index right now. And this is why I keep saying in AI2, this is where I'm focusing. I'm not worrying about anything down here. I'm keeping my focus right now on core and supply chain. That continues to work. And frankly, that's still, even working with 116 stocks. I mean, if I were a $10 billion hedge fund, I would own all 116 of them, maybe 110. As a retail investor, the biggest difficulty is always, which of these stocks do I own? Which do I trade? And that's what we're navigating inside of AI2. But I honestly, my biggest brick wall is I really wish that I could break through and trade or own more of these stocks. But it's not realistic. So even though I know where the money is, I know which stocks I'm going to gravitate to anytime I'm doing research analysis and stock picking, it's still frustrating sometimes because there are too many good names. I'll share an example in a moment when I go to the charts on a company called Keysight Technologies. And but what this really tells you is if you're following AI2, if you're following the AI2 index, there are, and if you do nothing more than just look for the stocks in those two segments, core and supply chain, you are more likely to find a winner than you are to find a loser. All things being equal, fundamental analysis, technical analysis, et cetera. The stock that we talked about yesterday, this will lead us into charts and more in a second. But yesterday we talked about Silicon Motion Technology, stock symbol SIMO. This is a foreign stock that is traded on, it is in the NASDAQ, or traded on the NASDAQ exchange, excuse me. And it's a growth story. And these are the types of companies that I'm looking for, whether I'm in AI Core, Supply Chain, uh, coming up soon, AI Frontier. There's stocks that I really want to trade in that segment as well. But this is the process of, how do I choose between these stocks? And this is a good one to start paying attention to, if not add to your portfolio potentially. Remember that everything that I'm sharing with you here are projections, not predictions. So certainly no guarantees of performance. But if we look at the numbers, they tell a strong story. The growth here in revenue and in EPS, very, very strong. Just from this year to next year, there's a little bit of a disconnect, and I'll come back to this in a second, on fiscal year 2028 on the revenue side. But you look at their earnings are essentially doubling between this year and 2 years from now. That is a company with extremely high growth rates. They are in a high demand market. They provide what are known as SSD controllers for NAND or flash memory. But what this is really telling me when I look at the numbers and I look at the stock price is this is a stock that's trading at a steep discount. Down at the bottom, 24% revenue growth, 40% earnings growth year over year, currently trading at about a 19x forward price to earnings ratio. For a tech stock, that's insanely cheap. And that is, again, as we talked about yesterday in AI2, that is exactly what I started looking for in February when I shifted the portfolio. I was looking for stocks that had lower forward price to earnings ratios, because I still believe that when Wall Street started to shift out of some stocks in the tech and AI realm, what they went hunting for was stocks where there was a better higher probability of buying that growth at a discount. They started to migrate to stocks with lower price to earnings ratios on a forward basis. This stock fits the bill. On my rating side, inside of the AI2 Index, it hits and it checks every single box that it could possibly check. The GDR stands for growth to discount ratio. It's a proprietary system that I've developed that takes into account revenue growth, earnings growth, and time, as well as price. So time is a function of how many years into the future I can look at the growth for a company. For some companies, it's as many as 5 years into the future. For some companies, it's only 2 years. But what that ratio tells me is when I'm getting the best possible price for the potential for growth. And stocks that have excellent or best or good, any of those are the stocks that I'm typically targeting. And on a value basis, I mean, we just looked at it right here with the forward price to earnings ratio of 19. That's a strong value, absolutely exceptional growth, 40% EPS on a compounded basis, very high. The average for the S&P 500 this year is 10.8% EPS growth. So this is a company that's projected to operate rather, at 4 times that. That's very strong growth, what I would call excellent. Its profit gap is above average. That's the difference between where the price is today versus where the price should be in the future. I'll share that with you here on the next slide. Let's move to that and look at price projections. Current price this morning, stock was up about 1.5 points, trading at around 136 and change. The stock has moved significantly over the last 12 months, certainly year to date. And the one thing that I would caution, because I am continuing to see this across the spectrum of stocks in the artificial intelligence realm, is when you see a number like this, 125% in the last 12 months, do not automatically assume that all of the price growth has happened. That's the value in the numbers on the previous screen here, right? If I'm looking at this earnings growth, all of this earnings growth is not priced into this stock. That is what the profit gap is telling me. It's telling me that this stock still has room to run, even though it is currently up 125% in the last 12 months. When we were following in the AI2 a stock named Lumentum, stock symbol LITE, we hit that stock 3 times for gains, 37%, 30%, and 61% since November. So my caution to you is just because you see a stock has run up a lot, and some of these stocks do retrace heavily if they miss their earnings, if they underperform, if they change their forward guidance, that you can't predict that. But that does not necessarily preclude these stocks from still having room to run. So when I look forward, and I typically just use the base case right in the middle, right? That's averaging out. I don't want to be too bullish. I certainly don't want to be too bearish. But what this tells me is that this stock should be valued somewhere between 269 and 167 in the next 12 months. I say in the next 12 months because what happens from that growth to discount ratio tells me is that at some point Wall Street has to pull that price forward, because Wall Street is pricing into the future. The prices that they're asking you to pay today are for earnings growth tomorrow, so to speak. So when I look at this kind of a spread from 160 to 400, this still tells me there is room to run. I mean, that is a near double from current prices at 269. So that's why I say don't automatically assume that all the growth has happened. It doesn't mean that it hasn't, but it is certainly a possibility. The other thing that I was looking at were Wall Street targets. All of these companies are behind the times. You guys got to catch up. These people obviously agree with me. So yay, B. Riley, thanks for your contribution there. But what it's telling me is you can see there's still a fairly wide spread from Roth all the way up to B. Riley. It's a $27 spread. That's not small. So Wall Street still has to catch up. If the company continues to outperform on their earnings, which they have for the last 10 quarters, this is a stock which still has room to run. In fact, let's drop over Sesame Street style on the chart neighborhood and see what that looks like on the chart. And there it is. We can see, right? Look at this long uptrend that's been taking place. This stock started at $40 last year. That was post-tariff announcement when tech stocks started to recover. Pretty solid base here that it grew out of. A little bit of a channel here, broke out, and now it's on a run. Now at actually up to 138 at projected at the open today. We'll see if that holds. More importantly, we look on a longer time frame. Right, this is a stock that is also now trading at new highs since 2022, all-time highs now. I mean, two big candlesticks here in the last 2 months on the monthly chart. So it tells you that the stock has upward momentum. When I come back to the daily chart, the other thing that caught my eye is down here in the lower right in the frame. You can see the substantial increase in volume that has taken place since the beginning of the year. So there is money coming into this stock. It has 83% institutional ownership. So that may be institutional buying. But the one thing I would note is the 2 bars here in early January, these 2 big green bars right there, that also coincides with the Bank of America report at the beginning of January about the memory shortage. So if you take that out for a second and you assume that the stock's based at about 120 a share after that announcment, between 110 and 120, right? So this is the real breakout that's taking place right here. This was a news-driven. I can't draw arrows this morning. There we go. This was a news-driven event. But everything after that is a continuation of that to a degree, but also outstanding earnings performance. Stock even pays a dividend if you're looking for dividend stocks. But again, it is a foreign company, so you may or may not have tax issues with that. Be aware of that. Check with your local advisor. But I project this stock having $30 at least to the upside. And I would say that that's sooner, not later, and up to $100 in upside over the next 12 months as a potential growth stocks. So back to our Breakfast Club slides. We're also off to a good start this morning with the AI2 portfolio. Sienna had a big move yesterday, another big move yesterday. So now two stocks at plus 13% since last week, since we entered them last week. ADI, Lam Research still holding in gains. AMD will probably cover about 10% of its loss this morning, which means it'll be sitting at about a -1, -2%. But again, if we get some momentum coming out of that announcement, I would see AMD breaking back above 220 sooner, not later, which is kind of what I said I expected yesterday. And I didn't know about the Meta deal. So that will certainly give us some strong performance. Overall, on the future side, we're pretty much green across the board. So it looks like a good start to the day for the AI2 portfolio. Overall return, 4.4% on capital allocated, just over 27,000 for that's minus the Micron. It's still about a 3% gain. 2.5% gain in a week. So portfolio is doing what it needs to do. We'll see if we can get a couple of the other positions moving. My watch list right now, SanDisk, Seagate Technology, Fabrinet. I talked about Fabrinet yesterday. I talked about it again last night. I'd still look for some pullbacks on these stocks before I jump in. I don't know that SanDisk is going to pull all the way back to 567. I may have to move that up. But the stock is already at 680, I believe. So I did this part last night. I've got to revise that. I would say this entry should actually be in the 650s, and this target should be in the 800s now. Anyway, for Fabrinet, though, I still see another 20% in that stock. I'd like to get a pullback before potentially entering. But again, all of these are still in the same sectors that we're talking about here: AI core, AI supply chain. I have another couple of stocks that I'm watching: ASX, obviously SIMO, and I mentioned earlier. We'll take a quick look at this one. This one's going to haunt me. Hang on, I have to share my screen. Let me fix that. Company is Keysight Technologies. They're in scientific and technical instruments. Another very quiet stock. This is what originally caught my eye, and I started looking at the stock right at the end of January. Much of what I started looking for at the end of January, stocks that were not as volatile, stocks with lower price to earnings ratios. This one still at a 28 times forward earnings. That's not outrageously high. But I was following this trend, a little bit of a breakout from earnings back here. Let's go to the big chart for a second. Right. And generally speaking, small candlesticks. So not wide or volatile action. And we got into early February, and then I thought, yeah, this is a good time to buy this company. But I chose a different company instead. And this one's going to haunt me. So big move up today. Probably is an announcement. They didn't. Oh, it is earnings. It jumps after earnings. They reported earnings. That's why. So 8.5% there, 3% there, flat on GAAP. So they beat earnings. So the stock is up 13.5%. This is going to keep happening. The biggest challenge is I don't want to try to gamble on earnings. That's not my game. But it frustrates me when I know I'm looking at a good company. I have a good reason for buying shares in the company, and then I do something stupid like talk myself out of it. And I did that on Keysight Technologies. And so, yeah, there you go. I'm going to miss on that one, but keep that one on speed dial. I would look for this stock to cover some of this gap. That's too wide of a gap. If it comes back down into the below 260, that's where I might look at potentially entering this one and see if it resumes a trend channel like it had here in January up into February. So let me see if I think that pretty much, we just had a couple more things on the deck and we'll be done, get everybody off to their day. That was it. So remember, NVIDIA's earnings are tomorrow after the market close. Supply chain is where the money is at. SIMO shows you kind of why. Tomorrow morning, we will do a case study on Micron. I've been talking about Micron since September, and we'll take a look at what has transpired in the near 6 months since I made that original recommendation. We'll preview NVIDIA earnings, but then we'll take a deeper dive on the impact of those earnings on Thursday. And then coming in March, a new little program called AI2 Discovery. That'll be for people who are just trying to get their feet wet and get a better understanding and better ideas on stocks that they can own in this segment. So that's your Breakfast Club for the day. Hopefully we have live trading today. So it's time for you to go get ready to make your money. So one thing here, difficult to read charts with dark backgrounds. I'm using, this is FinViz, so it's not a trading platform. Keep that in mind. FinViz has a light and dark mode button somewhere. Actually, hang on. Everything just froze on me. Give me a second to close that. Thank you. There we go. So they do have a dark mode. I find it difficult to see too, so that's why I prefer light mode on my charts. Inside of Thinkorswim, it's much more difficult to change from dark to light. But when I'm looking at FinViz is just a tool, so it can track. I can do research, track things of that nature. But I agree with you, Franklin. I much prefer the white background charts too. Sure, you're using, yeah, so there you go. That was it, Acom. The FinViz is just my tool. It's not a trading platform. So, all right, that's Breakfast Club for today. We'll have a replay up here in just a few minutes. So I hope everyone has a great day, and I will see you tomorrow morning at 9 a.m. Thanks for joining me.